For years, experts have predicted the end of the US dollar. Every few months, a new headline claims that the world is moving away from the dollar. Some point to the rise of China. Others highlight the expansion of BRICS. Many believe that gold, digital currencies, or a new international financial system will eventually replace America's currency. And yet, despite all these predictions, the US dollar remains the most important currency on Earth. It dominates global trade, it dominates international finance, it dominates foreign exchange markets, and it remains the world's primary reserve currency. So why does the dollar still rule the world? Why have repeated predictions of its decline failed to materialize? And what would it actually take for another currency to replace it? To answer these questions, we first need to understand how the dollar became so powerful in the first place. The story begins at the end of World War II. In 1945, much of Europe and Asia lay in ruins. Factories had been destroyed. Infrastructure had collapsed. Governments were overwhelmed with debt. Meanwhile, the United States emerged from the war stronger than ever. Its economy represented nearly half of global economic output. Its industries were booming. Its financial system was intact, and it possessed the largest gold reserves in the world. In 1944, even before the war officially ended, representatives from 44 countries gathered in Bretton Woods, New Hampshire. Their goal was to create a new international monetary system. The result was a framework that placed the US dollar at the center of global finance. Under the Bretton Woods system, currencies were linked to the dollar. The dollar itself was linked to gold. This arrangement created stability and confidence. For decades, countries around the world accumulated dollars to support trade and economic growth. Even after the Bretton Woods system collapsed in 1971, the dollar retained its dominant position. Many expected its influence to weaken. Instead, it became even stronger. The reason was simple. The dollar had already become deeply embedded in the global economy. Businesses used it. Governments used it. Banks used it. Italiano investors used it. And once a system reaches that scale, replacing it becomes incredibly difficult. This phenomenon is known as the network effect. The value of a network increases as more people participate in it. Think about social media platforms. People join because everyone else is already there. Currencies often work the same way. Companies use dollars because their suppliers use dollars. Banks hold dollars because their clients use dollars. Governments accumulate dollars because global markets operate in dollars. The more the dollar is used, the more useful it becomes. And the more useful it becomes, the more people continue using it. This creates a powerful cycle that is extremely difficult to break. Today, the dollar remains the dominant currency in international trade. Many commodities are priced in dollars. Oil is priced in dollars. Natural gas is often priced in dollars. Agricultural products are frequently priced in dollars. Even when transactions do not involve the United States directly, the dollar is often used as the intermediary currency. This provides enormous advantages. Businesses know what to expect. Markets remain liquid. Transaction costs stay relatively low, and financial institutions can operate efficiently across borders. Another major reason for the dollar's dominance is the size of the US economy. The United States remains the world's largest economy in nominal terms. It is home to many of the world's most influential companies. Its consumers represent one of the largest markets on the planet. Its financial institutions play a central role in global capital flows. This economic scale creates trust. Investors believe the United States will continue to generate wealth. They believe American markets will remain active, and they believe US assets will remain valuable. Trust is one of the most important foundations of any currency. Without trust, money loses its value. With trust, money becomes powerful. The dollar benefits from decades of accumulated confidence. But perhaps the most important factor behind the dollar's dominance is the US Treasury market. The Treasury market is the largest and most liquid government bond market in the world. Governments, banks, pension funds, insurance companies, and central banks all invest in US Treasury securities. These assets are considered among the safest investments available. When uncertainty increases, investors often buy treasuries. When geopolitical tensions rise, investors often buy treasuries. When markets panic, investors often buy treasuries. This may sound strange. Why would money flow into the United States during global crises? The answer lies in confidence and liquidity. Investors know they can easily buy and sell treasury securities. They know there will always be buyers, and they know the US government has a long history of honoring its obligations. No other financial market currently offers the same combination of size, liquidity, and global acceptance. This gives the dollar a tremendous advantage. Another pillar of dollar dominance is the global banking system. Many international transactions pass through dollar-based networks. Banks around the world maintain dollar accounts. Corporations borrowed dollars. Governments issued dollar-denominated debt. Financial institutions settled transactions using dollars. This infrastructure has developed over decades. Replacing it would require enormous changes. Countries would need new payment systems. Businesses would need new contracts. Banks would need new risk management frameworks. And investors would need confidence in alternative markets. Such transitions rarely happen quickly. This is one reason why predictions of rapid de-dollarization often fail. That does not mean that dollarization is a myth. It is happening, but it is happening gradually. Several countries have increased the use of local currencies in trade. China has promoted the international use of the yuan. Russia has reduced its dependence on the dollar. Members of BRICS have discussed alternative payment systems. Some countries are purchasing more gold. Others are diversifying their foreign exchange reserves. These developments are real. They reflect growing interest in reducing dependence on a single currency. However, reducing dependence is not the same as replacing the dollar. That distinction is crucial. Many countries want greater flexibility. Few have identified a realistic replacement. Consider the Chinese yuan. China is the world's second largest economy. It is the largest trading partner for many nations. Its economic influence continues to expand. On paper, the yuan appears to be a logical challenger to the dollar. Yet significant obstacles remain. China maintains capital controls. Its financial markets are less open than those of the United States. Foreign investors face regulatory uncertainties, and global trust in China's legal and political institutions remains limited compared to Western financial systems. As a result, many investors hesitate to rely heavily on the yuan. Then, there is the euro. The euro is the world's second most important reserve currency. It is backed by a large economic bloc. It benefits from sophisticated financial markets, and it enjoys substantial international credibility. Yet the euro also faces challenges. The Eurozone consists of multiple countries with different fiscal policies and political priorities. Financial integration remains incomplete. And there is no single European government bond market comparable to the US Treasury market. These limitations reduce the euro's ability to rival the dollar. Some people argue that gold could replace fiat currencies altogether. Gold has certainly experienced a resurgence. Central banks have purchased large amounts of gold in recent years. Many governments view gold as a hedge against geopolitical uncertainty. But gold also has limitations. It does not generate income. It is difficult to transport. It is not practical for most modern financial transactions. And it cannot easily support the vast volume of global trade conducted every day. Gold can complement the monetary system. It is unlikely to replace one. Others believe cryptocurrencies will eventually challenge the dollar. Digital assets have grown dramatically over the past decade. Blockchain technology has introduced innovative financial possibilities, and some investors see decentralized currencies as the future. However, cryptocurrencies remain highly volatile. Their values can fluctuate dramatically within days or even hours. Most businesses are reluctant to price goods in assets with such unpredictable movements. Governments also remain cautious about surrendering monetary control. As a result, cryptocurrencies have not emerged as serious competitors to the dollar in global trade and finance. If no alternative is ready, does that mean the dollar will remain dominant forever? Not necessarily. History teaches us that no currency reigns indefinitely. The Dutch guilder once dominated international trade. The British pound later became the world's leading currency. Eventually, the dollar replaced the pound. Change is possible. But history also teaches us that such transitions take decades. They do not happen overnight. They require profound economic and political shifts. A future decline in dollar dominance would likely result from multiple factors. Persistent fiscal instability could weaken confidence. Political dysfunction could damage credibility. A major financial crisis could accelerate diversification. Technological innovations could create new alternatives. And rising economic powers could gradually build competing financial systems. Yet even under those circumstances, replacing the dollar would remain a monumental challenge. The real question is not whether countries want alternatives. Many already do. The real question is whether those alternatives can match the advantages that the dollar currently provides. Can they offer deep and liquid financial markets? Can they provide stability during crises? Can they maintain investor confidence for decades? Can they support trillions of dollars in daily transactions? So far, no currency has demonstrated all of these qualities simultaneously. That is why the dollar remains dominant. Its strength is not based solely on American power. It is based on a vast ecosystem built over generations. It is supported by financial markets. It is reinforced by global trade. It is embedded within banking networks. And it is sustained by trust. This does not mean the dollar is invincible. Its share of global reserves has gradually declined over time. More countries are exploring alternatives. The global financial landscape is becoming increasingly multipolar. Competition is growing, but dominance and decline are not the same thing. A currency can lose market share while remaining the world's most important currency. That is exactly what we are seeing today. The world is changing. New powers are emerging. Alternative systems are being developed, and de-dollarization is becoming a more common topic of discussion. Yet, despite all these changes, the dollar continues to sit at the center of the global economy. Not because there are no challengers, but because none of those challengers have yet built a complete alternative. For now, the world's financial system still runs on the dollar, and until another currency can match its scale, liquidity, stability, and trust, the dollar's reign is likely to continue. The dollar may not rule the world forever, but today, it still rules the global economy, and that is the real reason the dollar still dominates the world.